Okay, let's make sure this is working. I should probably turn on some light so I don't look like a ghost. Wow, that did absolutely nothing, but we ball. Okay, so quick little explanation lesson video here that I just wanted to go over about capitulation in stocks and how it's quite similar to parabolic extension in a way, and how you can kind of use that to identify bottoms in the market. So more recently we had a pretty significant sell-off in your primary indexes, SPY, QQQ, IWM, etc., in relation to the Trump tariff news. To be honest, I think we're going to look back in quite some time, and the news itself isn't going to matter. We're just going to forget about it, but the price action is important. And I want to quickly just go through why I thought Monday was going to be the bottom, how it was the bottom, some things that lined up that kind of assisted in that thesis, both technically and fundamentally, and then kind of how I played it based on that. So first things first, what did we have? Well, just from a logical perspective, market from the highs going into Monday was going to be gapping down 20%, maxing out at down 21%. So from February to April, which is about 2 months, really a month and a half from the middle point in February to the beginning of April, a month and a half, market's down 21%. So just from a logical perspective, if the market is expected to return 10% a year over the last 120 years or so for large cap equities, you can't really go wrong buying down 20%. That's kind of my opinion on it. That's just step one. So step one, in my IRA, I'm putting in buy orders for VTI, which is the index that I use to long in my IRA. But just from a logical perspective, down 20% in 2 months, it just makes sense. That's something that to me seems like a no-brainer. Maybe that's a little bit more difficult to understand, but for me personally, anytime we've gotten a significant decline in a very short period of time, it's offered a pretty solid buy along the way. You look at times like October of 2018 when we had tariff concerns. Right, market drops 12% in a matter of 2 or 3 weeks. You obviously have COVID. You have this period in December, and all of these, while they look 2022, while they look different, there's a lot of similarities between them that we're going to talk about. And the most important correlation for me is the gapping that we see. So you can see from April 2nd to April 3rd to April 4th to then Monday the 7th. You have these sequential gaps after a period of downturn. So by the time the gapping starts, the market is already down 10%, which is a pretty big decline for the year on SPY, right? That's what the expected return is. So to see the expected return on this kind of slow grind down checks out. But then when you dump an additional 10% in a matter of 3 days with sequential gapping, it's very reminiscent of our parabolic longs that we've experienced over the last year. So if you take a look at something like an SMCI, and this is just the parabolic short strategy that I've discussed in detail on my Twitter and other platforms, where you have a nice grind upwards and then eventually price just begins to sputter and you get gapping, okay, where you make a significant advance with sequential gapping, 3 gaps, and then on that 4th day, right after the 3rd gap, that's when you get your turnaround bar. It's very similar to MSTR, which is an analog that I traded in November as well, right? Gap, 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 and then fade on that 4th day. Conveniently enough, we're talking about it today because RGC actually did that exact thing as well. Right, you've got your gap, and then final gap today. And if we do that on the 5-minute, you can see the similar setups there. If I were to pull up the SMCI or the MSTR setups, you could see that here. So if I go ahead and pop this up on screen here, you can see you've got SMCI on top where you have your consolidation, flat top base, gap, fade, consolidation, consolidation, flat top base, gap, and fade. Same thing with RGC, consolidation, consolidation, flat top base, gap, and fade. Okay, so that's a pretty standard setup for parabolic shorts, but it can also work in reverse on capitulation, because what do we see in the parabolic short? You see accelerated volume and you see gapping after a trend already in that direction. Okay, so for SMCI, you have this long run that leads up to it. For MSTR, same thing. For SPY, you have exactly the same thing, just in reverse, right? If I were to flip this upside down, you would see that that you have that same kind of look, right? You have your slow grind up, maybe one structured trade, right, where you actually have a realistic bull flag here to trade. Again, this is inverted, but you get the idea. You have a regular bull flag, and then you go right into this kind of capitulation where volume is accelerating. Okay, you can see on all three of these days with sequential gapping, you've got accelerated volume, and then into that final day, you've got the exact setup that we discussed, okay? So you've got your consolidation, consolidation. You don't quite get that flat top base here, but it's reminiscent, and then you get your gap and your turnaround there very quickly in the morning. If you were to look at the NVIDIA candle as well, which is very similar to the SPY candle, you'll see that as well, right? Same thing here. This is again inverted, but you've got gap, 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 and then with volume accelerating, and then that's your turnaround. Okay? So how do you play this? Well, first things first, for me, I'm thinking about what stocks are getting beaten down the most, whether it be because they had sold off prior to the market selling off, and then they're just selling off with the market again, kind of getting double dunked, or they're just returning to historic spots of value. So for the latter, SPY returning to the 2021 all-time highs. Okay, we know throughout, I don't know, thousands of back tests that historic all-time highs are great points of, or great pivot spots. So if you're retesting them, something like a Cava, right? You've got your IPO base, you break out above it, you come back in for the retest. Something like a Meta around its IPO, same thing. You have an all-time high on big volume, and then you come back in and retest it. Okay, and we can see this on numerous occasions on various stocks, that these previous all-time high spots are generally great areas for longs. Okay, so from the broad indexes perspective, we had this technical alignment of the 2021 all-time highs coinciding with the sequential gapping. So if you think about, and the huge volume. So if you think about how many things you need to see to determine a high risk reward bottom, the ones that are high probability are really adding up. We know that the parabolic short and the capitulation long are very high probability setups with the sequential gaps. And then we also have a 2021 all-time high to coincide with that. So to me, that's an obvious high risk reward spot. Whether that's the ultimate bottom, whether we drift below it very slightly or begin to make marginal lows like we did in 2008, right? Where you have your previous low from 2002, you come into it, you make marginal lows below, then a higher low, and then continue higher. You're closer to the bottom buying into that than you are trying to wait for the bounce and then waiting for it to set up, okay? So from a strictly risk-reward perspective, you are better off making that buy there as opposed to making that buy after the setup is already set up, because you don't know if it's a dead cat bounce or a bear market rally. Right? But buying into the lows, you can get a pretty confident buy knowing that you're closer to the bottom of whatever it might be, the dead cat bounce, the bear market rally, or the turnaround, than you would be if you wait for it to set up. So for me personally, it's very easy to flip long in a situation like that because so many of the highest risk reward setups that I've traded are displayed all at once after that logical point that I made, a decline of 20% on SPY in a single year. That's extremely unlikely to continue to decline from there. Okay? So, yeah. So that's kind of the setup. Now, as far as fundamental buys, okay, and actually I'll just cover the lows structure as well. So if we take a look at SPY, you can see that you have an initial low structure here in March when it sets up that bear flag for continuation downwards. If I were to turn on some MAs here, that would be a little bit more clear. You can see coming in, retesting the 1020, pinching, trying to break above, fails, and then continues to the downside. Then a further low in April here. Okay, and this is a pretty big gap. Okay, relative to the stock, this is a 12% difference. On the broad market, that's a huge fucking gap. So any stock that's making consistent lows from March to April, okay, if they're past leadership names and they're making consistent lows, then the likelihood of the stock market being in a decline is very unlikely. Okay, names like Rocket Lab, which are historic leaders for their sector. Obviously, Rocket Lab's a bit smaller of a company, but you can see the consistency in the lows. Some names that are actual leadership names, like Geo, putting in higher lows. Okay, names like App putting in lower lows, but certainly not nearly as wide of a gap as the broad market. So if past leadership names are putting in, Hood putting in very similar lows as well. Names like Crowd, Cyber Leadership putting in a perfect double bottom. Okay, so if past leadership names are putting in same lows or higher lows from March to April, while the broad market puts in much lower lows, well, then your risk reward on those stocks is even better because you have broad market at a point of capitulation with capitulation selling and that capitulation long opportunity with the sequential gapping. Then you have past leadership names displaying either same lows, slightly lower lows, slightly higher lows, much higher lows, or higher lows altogether than what SPY was putting in. You're essentially creating a recipe for a tremendous risk reward buy spot there. Okay? Then, and we're not going to go too deep into this, but then if you factor in just fundamental value, so some of the names that I bought on that day, names like VST, and some of the other electric utilities names, these stocks were trading well below their historical premium to comps, which is, their historical average price to free cash flow, PE, and those were the main two that I was paying attention to. And VST is trading below all of those pretty significantly going into March, and then even more going into April. So from a value perspective, if I believe that regardless of the economic conditions that Trump was putting us in, which really just had to do with foreign affairs, why should a stock that has to do with domestic energy production that really won't see any slowdown because we haven't seen any slowdown in data center development, why should those names be trading at well below their historical premium to comps? It doesn't make any sense. Stocks like VST, GEV, they all got beaten down much earlier than SPY. They put in their highs in January, whereas SPY put in its highs in February. So they already got beaten down. Then they get beaten down again with the broad market, which puts them at tremendous value, and they're not impacted by anything that was selling off the market to begin with. So you're essentially left with incredibly high quality risk-reward positions on some of these great names. CrowdStrike, cybersecurity, same thing, right? Putting in same lows while market puts in lower lows, but CrowdStrike is not impacted by Trump's action overseas. So there's not really a reason for this name to be selling off as significantly as SPY was. Okay, PLTR is in the same vein with cybersecurity and big data management. So why are we getting a sell-off that breaches the lows that were put in March for these stocks that did need a pullback, but then to breach them again didn't really make much sense? So it offered fundamental value on a lot of these names, plus you had coinciding sell pressure on SPY down into the 2021 all-time highs, which we know is a really high quality buy spot for just broad markets as a whole. Then you also have your sequential gapping, which we see on SMCI, MSTR, on their parabolic runs. And when you align all these factors together, it can become very easy to flip bullish just based on price and fundamentals alone. Leadership names performing well, you've got sequential gapping coming in, and you also have price starting to capitulate downwards on that massive volume. Okay, so again, I know it can be difficult with so much of the Twitter and the noise that comes in. When SPY's selling off, the Trump news was absolute pandemonium, of course. But at the end of the day, you've got a lot of coinciding factors that lead to really high risk-reward spots to become bullish. Okay? And if we go ahead and look back at some other points in history where we did have kind of capitulation selling as well, you can see in 2018 you had something very similar. Obviously not nearly as strong of a sell-off, but you do have gap, 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 and then your big turnaround bar there as well with accelerating volume. It's the same exact thing as what we see in parabolic long setups in normal everyday stocks, okay? Broad markets do it on capitulative lows, and it's the same concept over and over and over again, and you can backtest this throughout a number of years. But yeah, I hope this helps you understand a little bit better about the process of flipping bullish from being bearish, because I know it can be difficult, and you want to wait for the setups to show themselves, but sometimes the best setups are just buying into logical positions, buying into relative strength on individual names when the broad market is pulling back to a very historical all-time high that it's bounced off before. Okay, so if you're watching this, this will be up on YouTube. I'll probably put this in Discord as well. But I hope this helps give a better understanding of what's going on in broad markets and kind of how to identify buying into selling, because I know most of us have rules about, I only buy when stocks are above this SMA or that SMA or this EMA, and I only buy when you've got your breadth indicating this or that or whatever. I don't pay attention to any of that crap. There are very obvious signs of capitulation and parabolic extension, and those create extreme tails of opportunity. So, hope this helps. And for those of you who missed these opportunities, there will be more, right? If we go back to, October of a couple of years ago, where we had some controlled selling and then kind of a lockout rally, you miss the first month or so, but then you get a nice tight setup on the broad market and a very clean run, tight setup and clean run, and then just grinding higher. Okay, so it's not the end. There will be plenty of opportunities. Individual names are starting to shape up. Earnings season is well underway. But for those who want to be able to buy into lows like that, that's how I do it with sequential gapping and just logical trading. Hope this helps. See you later.